Hey, welcome back to the channel. The Bank of Canada just cut its key rate again, down to 3%. We're going to talk about what this means specifically for Vancouver real estate. I'm also going to give you a feet on the street perspective on what's really happening with the market as we start 2025. Real quick, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. When I'm not making videos like this, I'm helping people just like you buy and sell real estate across the Lower Mainland. So if that sounds interesting to you and you wanted to chat about your own real estate situation with me, you can book me for a free call in the Calendly link below or on screen, and subscribe to this channel so you don't miss a future weekly video. All right, hope you had a wonderful week. We're going to start off this video by talking very quickly about the Bank of Canada's rate decision and what we can expect for future rate decisions and how that will impact the Vancouver real estate market. So another cut, 25 basis points. We're sitting at a 3% policy rate now. If we look at where we've come over the last year and a half, we've seen that policy rate drop from above 5% down to 3%. So significant rate cuts. You would think that this is going to create an influx into the real estate market, correct? Not exactly the case. Now, with this rate decision came a lot of uncertainty that has the potential to very much impact Vancouver real estate. And that has to do with the trade uncertainty and the tariff uncertainty with the US. Not going to dive super deep into it because that takes us away from the real estate focus. But the long and short of it is this: if you were thinking that the Bank of Canada had a line of sight into what they are going to do next at their next policy decision in March, whether they're going to cut, whether they're going to raise, they came out and said this is very difficult for us to give any sort of forward guidance in terms of what's going to happen with the rate moving forward. And as we've talked about on my channel, even when we see rate cuts happen in the market, the fixed mortgage market, the fixed rate mortgage market, it does not fluctuate with this policy rate change by the Bank of Canada. And we found that fixed mortgage rate to be pretty sticky overall over the last few months. And so, not a lot of deviance, not a lot of change in that fixed rate. Around 75% of buyers are taking a fixed rate mortgage. So that's the real estate market, especially that entry-level consumer buyer. They're very heavily relying on that fixed rate, and that fixed rate hasn't changed so much. And so we'll talk in a second about what that has meant for sales activity. But, going back to what might happen in the future, all bets are off, because what we may see if we do actually see these Trump tariffs come into place, is we may see a scenario where our GDP, our economy, we will see a scenario where our growth declines significantly, but the cost of everything goes up, especially if we see the dollar weaken further. And usually you see growth in the economy and inflation kind of rise together, where, the Bank of Canada is saying, look, this is a scenario where we'll see growth decline, we're going to decline, yet we're very likely to see inflation prices go up. So they're going to have to weigh out what's the bigger issue at that time when they're making the rate decision. Is it inflation getting out of hand? Then we would potentially see a rate cut. Is it growth grinding to a halt? Then we would potentially see a rate cut if we saw growth declining to a halt. Inflation going up, then we would probably see a rate hike. So anyways, long story short, no one knows what that next move is going to be. But when we talk, bringing it back to the Vancouver real estate market, as we sit here in January, I'm recording this on the 30th, so I don't have all of the data for January. But if we look at sales activity compared to last year, we're very likely to end up slightly up over January of last year. We might be flat, but I think we're going to be a little bit higher than last year's number, just marginally. However, having said that, the year prior was up 30% sales activity-wise over the year before that. So perhaps we're actually moving into a bit more of a normalcy scenario. And when I say a bit more of a normalcy scenario, our market today is obviously very different than how it was a couple years ago, and especially how it was during pandemic times. I was talking to one of my clients, and we're talking about, what if these tariffs do come into place, and what if the Bank of Canada does have to cut rates aggressively? Would we see this influx into the real estate market? Would we see that heightened activity like we saw during pandemic times? And I think, A couple things to kind of address. If that were to occur, if the Bank of Canada were going to aggressively cut rates, make no mistake about it, they're going to do it because they absolutely have to, and the economy is going to be in dire straits. And when I say dire straits, production down, more unemployment up, more people losing their jobs. It's going to be, it would be a really nasty scenario. By the time you watch this video, it'll be February 1st. We may have a line of sight in terms of whether that initial 25% tariff will be placed. If I was a betting person, I would say no. So again, while watching this video, you may have an idea, but that's not to say that this trade relationship between the US and Canada is going to be all solved as of February 2nd. This is a card that President Trump is going to play multiple times. So circling back to, are we going to see that pandemic level activity? Well, no, this is going to be a lifeline thrown into the market. Number two, what a lot of people could not forecast when it came to pandemic is how our lifestyles would change based on the pandemic. So the reason we saw all of that heightened activity really is people were forced to work from home. They were forced to work in smaller spaces. So now they were really feeling that square footage that they were living in because they were home all the time. They now needed another room for an office space. They didn't want to live close to each other. They wanted to have their own space, their own yard. We didn't know how long the pandemic was going to last. So you had this lifestyle shift almost in desperation of young couples, families needing to move towards more space. And at the same time, money is going to be dirt cheap, free to borrow. And so it was kind of this perfect storm, if you will, which caused that escalation in prices. This time around, we are, very, very unlikely to see anything of the sort. From an activity perspective here in the market, what I can tell you is showing activity is well up, and I would say even well up of last year. There are a lot more showings happening. We went to an open house in False Creek, 2-bedroom condo above 1.2 million. They had 30 groups through, and usually on that higher end condo, that 2-bedroom, usually that's a bit of I'll say a safe space for buyers in the sense that you're not competing with a lot of people that are looking for that type of product. 30 groups through, but no offers. And I know you're probably sitting there thinking, okay, well, you're just one realtor giving one example. We stay connected as realtors. We're staying connected with a whole bunch of realtors right across the Lower Mainland and the Fraser Valley. So, for example, we will all be involved in, most of us will be in, a whole number of groups on Slack and on WhatsApp and just literally, tens of groups of just realtors and specified groups. So one of them might say, okay, and here you can only post assignments that you are not allowed to put on the MLS. In this group, you can only post just listed, all of these different rules surrounding them. And one of the groups will be open houses, where we will strictly talk about open house activity and how that's been going and activity, showing activity right across the board in talking with these other agents is way up. So someone will post and they'll say, I have a 2-bedroom, 2-bath, first week on market. This is the price. This is the area. This is how many groups I had through. And the reason why it's important to get this sort of anecdotal evidence of maybe what's happening in the market is statistics are great. Statistics are facts, but they lag. We're always looking back at statistics. They're telling us what happened previously. Even if previously was a week ago or 2 weeks ago, in the moment, things have already changed. So we get a bit of an idea in terms of, what's actually happening with the market in real time. So activity is picking up, but I wouldn't say necessarily sales and offers have really picked up. I do think we're going to have a more active spring, but, very important that's going to happen this year when it comes to real estate is a home is going to become a home again. And what I mean by that is real estate is going to transact for the most part on a consumer level. And so, in years past, I probably don't have to remind you, but our market has been heavily driven by investment into the real estate market. And, whether or not an investor actually bought a piece of real estate, their involvement in that offer process, in that demand process has pushed prices up. And so what I mean by that, you may be what we call an end user, a consumer. Maybe you're a young family, you were getting into an entry-level detached home a few years ago. and you were bidding against another two buyers to get into that home. Well, guaranteed one of those buyers at the very least was an investor. And maybe you were up against another person that wanted to call it their home. And even though you ultimately won that property, the reason you paid that higher price that you did is because investment drove that price up. What's different about 2025, what's going to be different, and I've said it before, is we are going back to home being a home, meaning that the people that are making consumer type moves, and so I mean people that are newlyweds, they need to move into something larger, that type of a move is happening. Downsizers, that type of a move is starting to happen again. So someone that has a detached home, they're elderly, they don't want to deal with all of the maintenance, that move is coming back into the market in 2025. So it's rather healthy. It's a return to a healthy, more normal real estate market. So from that, I expect that activity levels are not going to shoot through the roof. Prices are not going to shoot through the roof. Again, investors have been a big key in kind of driving up those prices. Now, where it's very important though to, distinguish is this year, submarkets are more important than any. And so what I would say is if you are a real estate buyer or a seller, I really would encourage you to not look at headlines because the submarkets right now are insane. So, for example, I did a video either last week or 2 weeks ago, downtown Vancouver condos, specifically luxury condos, and how they're taking a massive hit. There's a huge shift happening that's happened over years, but we're really starting to see that culminate now. Just the other day saw an article that 4 penthouses owned by a prince in Dubai, 4 penthouses at the Fairmont Pac Rim are now listed on the market. Originally purchased, when you add it all up, around 54, 55 million, they're now on the market for 10 million less than that. And so when you see these very large global players, some of the wealthiest people in the world, starting to shift out of downtown Vancouver, or at least shift real estate out of Vancouver in general, probably ties to some of the trade's uncertainty and where obviously they see Canada headed over the next little while. But back to my point, if you were to ask me, how's the market in downtown Vancouver, I'm going to have a very different answer for you than if you ask me how is the entry-level detached market in Coquitlam, one that maybe a developer is into, maybe an end user is into. And so micro markets, sub-markets can be very important. I think that entry-level detached will be one of the few products that'll still be quite investor driven, especially an older home. So if you're going to purchase an older home with a suite, those properties are still seeing multiple bids on them because you have the end user, you have the investor that wants it too. They want to build a multiplex there. So it's very important to really break it down. But if you focus on headlines, the headlines are going to grasp the downtown Vancouver penthouses on sale, fire sale happening. That's where the headlines are going to be. So it's very easy as a buyer or a seller to read that headline and kind of extrapolate that over all product types, all markets, all cities. It is extremely different depending on what you're looking for, where you're looking for it. I still think if you are a first-time buyer or you're looking to get into the market and you're looking in the condo space, I think it's an excellent year, just an excellent year for the long term if you're considering purchasing for the long term to get into that condo market. You have lots of options. You have less competition happening depending, again, which areas you're looking at. If you can be flexible on area, you can really nab yourself a really good deal. But, as we move forward into 2025, there is a ton of uncertainty out there, at least at this current moment. And, when there's uncertainty, really what that does is it kind of pushes the investment away. Investors can afford to kind of sit back and watch what happens, but people are still needing to make moves. Life happens, right? You get married, you unfortunately get divorced, these sorts of things happen and they trigger what your next move is going to be. And so those sort of moves are going to dominate the market in 2025. And again, if you're a buyer, I think you're going to be competing less this year. If you are a seller, keeping that in mind, really understanding who your buyer is going to be, very important, and having a realtor that actually structures a marketing plan that's going to hit that specific buyer, extremely important, because again, the buyers are going to be well defined this year. The person for your property is going to be a very specific type of person. And so the marketing and of course the pricing, you can't overshoot pricing and expect this is going to be the year that again, you're going to have investors and you're going to have consumers running up prices to get to the price you want to reach. That's not going to happen. You know, properties are going to trade at fair prices. I think in my prediction video, I expected about 4 to 5% increase in prices over the year, a little bit more than that in detached, a little bit less than that on condos. But this is not going to be a year where prices escalate. Of course, anything can happen when it comes to this trade uncertainty and the tariffs, and that could really put a hamper on a lot of the stuff we're talking real estate wise. Again, I don't think it's going to happen. Tariffs are also bad for the US. This is not something that is unilateral. The federal government has said we would match tariffs dollar for dollar. Of course, the trade deficit, favors the US, so we would be more impacted per se, but it's not helpful for either country. So I think whatever happens, it'll be short-lived. It'll be less than what we're hearing about in the news. I don't think it's going to have a major impact on the real estate market moving forward. So there you have it, guys. I hope you enjoyed this week's video. If you did, hit the like button, because what that does is it takes the video and it sends it out to more people so they can also learn from it. And if you enjoy weekly real estate content, subscribe to this channel so you don't miss next week's video. And lastly, again, if you're in the Vancouver area or the Fraser Valley, you want to chat with me one-on-one, you can book me for a free call, or you can just give me a call, send me a text, shoot me an email. All my contact info is below. But I want to thank you again for watching this week's video, and I look forward to seeing you next week.